Hello, everyone. My name is Anae Agostini. I'm CEO of CID Insurance Programs, and I want to welcome you to Running a Successful Agency in a Hard Market, our new webinar, which is deemed appropriate for what we're going through and we're all feeling in this hard market. So let's get ourselves started here. Logistics first. Of course, you know everyone's going to be defaulted to mute. You're able to hear, of course, but not speak. But your voice is important to me and to us as a company. So please add your questions in the chat as we go, and I'll stop and answer them for you. Again, a short survey at the end. Your feedback is important to us, and we'd love for you to give us your feedback after the webinar. What's our agenda today? So we're going to talk about an overview of the current commercial insurance marketplace. We're going to learn how to succeed in a complex commercial insurance market. This webinar is about commercial insurance, not personal lines insurance. So, and that's the most important class of coverages to be able to build your book of business efficiently and fast. Utilize effective operational systems. We'll talk about managing new and renewal business. And then what are the successful ways to market for new business opportunities? So let's jump right into it. So let's talk about an overview of the current commercial insurance market. So we've been experiencing a hard market since 2019. Whether we know it or not, it's been creeping on. We felt the full effects of it in the last year and a half. It started during COVID. And so what the result of that is what we're all faced with, which is increased premiums, stricter underwriting guidelines, and a reduction in coverage products available. So people are just stopping writing certain risks, which makes it really harder to place. So those are the three things: increased premiums, stricter underwriting guidelines, and coverage, less coverage offered by carriers. So hard market versus soft markets. It's basically a hard market is a seller's market, right? It's hard to place things, and thus it's a hard market. And that the seller it's a seller's market. So really, they have the insurance companies have all the power versus a soft market where everyone's fighting. It's very competitive pricing, low premiums, easy underwriting guidelines, and lots of products available. So they're just the opposite of each other. But obviously, a soft market is a buyer's market because then buyers can really shop and get really competitive premiums. So that's in a nutshell. That's a hard versus soft market. What conditions have contributed to the What contributed to that hard market? What was causing it? Well, it started with COVID. COVID was a big instigator, set it over the top. We've had a lot of catastrophic losses, whether it be hurricanes, tornadoes, but heavy storms that have caused a lot of losses that carriers have had to endure. Does it come out on a positive impact because obviously they have to keep so much in reserves, and if they're paying out too much in claims, it's got to give somewhere. Economic inflation, we know that's a problem. We're all feeling that right in our pocketbooks. and a new one called social inflation. It's a term that describes how insurers' claims costs are they're increasing above general economic inflation. So it's that this is actually a trend where where increasing litigation costs are being brought on by plaintiffs seeking large monetary relief for their injuries. So this is definitely having a huge impact on what carriers reserves and their ability to stay profitable. So that's where we're getting this inconsistent underwriting profits and mixed investment returns. So hardening insurance markets are creating a labor-intense process. So it's making it more challenging, more work to place a risk, whether it be new business or renewals, because renewals are being non-renewed and you're having to find a replacement for them. And a lot of this is going to what we call the E&S market because the standard markets are not writing things. So and that's really also being compounded. So labor for you is increased because of the work you have to touch each renewal, and each new business is taking more work to write. Also, compound on that the plugging talent shortage. That COVID really caused a lot of that. People left the workplace, and so people are resigning, aging out, smaller inventory of qualified candidates. We call it quiet quitting when employees continue to put in the minimum amount of work. So we're all struggling to find good employees at this time. So that just makes it a little bit more challenging. Okay. So let's talk about something positive, right? Because the view isn't great at this point. So let's see how we can turn this around, how to succeed in a complex insurance market. Well, building success, you have to understand that the hard market will continue. So it's not going to go away tomorrow. It's going to be with us through 2024, and it will begin to show signs of softening potentially. It really, it all depends. So there's no, we don't have a crystal ball that's going to give us all the answers, but there's forecasts that it should soften in 2025. But again, it could go through 2025 depending on what happens. All these factors that are contributing to it. So another thing to think about is take inventory of your carriers, your MGA, and wholesale relationships. That is really, really important. You need to have a team of people working with you that are that have your best interests, are going to work to get quotes to you in a timely manner, are going to be responsive to you and answer your questions and try and help make this whole hard market process a little bit easier. That's important. Review your commercial book of business for class of business diversity, market placement opportunities, and profitability. So this is a time that if you have the ability to take a look at where your premium is for your commercial business, what classes of business are you writing, what's your book made of, and are you struggling with some of those classes of business for market placement opportunity, and is it profitable? So that's really important. I'll talk a little bit more about that as we go. Last, important, evaluate your agency operations and marketing performance and drive your success with efficient and effective systems. We'll talk more about that as well. Okay, let's start with evaluating your agency operations. How do you measure your operational systems effectiveness? It's really the efficiency and the labor that it takes. So one thing that we have been successful in at our agency is creating systems that are efficient. So processes for handling service, renewals, new business that are systematic and have an order to them, and everyone uses the same systems, and that has made us very efficient and able to function on less labor than if we were just letting people do what they want and everyone doing something different. So that's definitely something to take a look at. What agency duties are you and your team most focused on by choice or necessity? That's another good question to ask yourself. I think, in this day and age, you're finding that renewals are a lot of what is taking up more time and is definitely taking the focus off of new business production. And we'll talk more about as we go. But analyzing that renewal process and your customer service efficiency, those are the keys to managing labor costs and policy retention. And then as well, you want to examine your new business production plan. Is it effective? How much time are you dedicating to it? Are you able to measure your results on ongoing for your success? So some of you are going to be independent agents. Some of you are going to be farmers agents. I think that's pretty much most of who we work with in the industry. And so for those of you that are farmers agencies, you farmers is your go-to. Well, farmers isn't really delivering a lot on commercial insurance these days, but and you're being forced to really run an run an outside book of business. And in that sense, you've got to find systematic ways to manage your new business and your renewals. So as you see, I've got two calendars here. One's set up, the one on the right is set up by week, and the left one is set up by month. So if you're looking at new business and you want to hold yourself accountable on a regular basis and know where you're at, it's best for new business production to measure it weekly. It gives you 52 start dates, and it's the most effective way. It sort of like puts it in your face whether you're actually making progress or not. And that measuring your results is really important. So if an Outlook, you could use Outlook for this, and it's fairly easy because you could turn it on. You've got it will number the weeks for you for the year. So what about renewals? So our recommendation and how we work in our office is that we do 12 start dates for renewals. So we do those by month, and so you're always finishing up one month, going into the next month, and you're starting the next month, and then you're starting the process because it's usually a 60-day process. You'll probably be working 3 months at a time, but that you're running your renewals by effective date, and then you're managing them by month. And the key here is to make sure that it's issued, policy is issued, and your company or agency is paid. That's really when you're finished with a renewal. And it becomes the same way for new business as well. You want to see that all the way to the end. You want to make sure that the policy is issued and that you've been paid. And be sure, if you have any questions, please chime them into the chat. So these are really simple tools that I'm introducing to you. You can be more efficient. Whatever software you have, you could use that. But I'm a big proponent of a sales equation for managing new business and renewals in a systematic way. And it's simple. An X date plus presentation plus close equals the sale. And that can be for new business or renewals, because X dating is the first place you start, and that's managing new business and renewals by an expiration date, right? I just showed you the chart for managing renewals by month, and then X dating is when you're going out, and we'll talk a little bit more about that when you're going out and seeking new business opportunities. Presentation is making a formal presentation for new business and renewals. And then closing, which most people fall short on this area, and that's why they don't always, their bind ratio isn't as high, because the closing, you have to close the deal. You have to follow up. You have to find out what obstacles you still need to overcome in order to close. So that's following up to finalize the bind order. Okay. Operational keys to thriving in a hard market. Concentrating on efficient client retention is super important. You want to retain your book of business. And it's been challenging with this hard market because, and that's why I'm suggesting that you evaluate the classes of business that you're writing, because not all classes of business for commercial are easily, rewritten when they're being non-renewed. So you may have to shift gears here. We'll talk a little bit more about that as well. You want to build strong relationships, as I mentioned before. Well, strong relationship with your clients, by providing exemplary services, providing subject matter expertise. Risk management services is a great way to provide value, which makes you important to that client, and they want to stay with you. Cross-selling your book of renewal business is a key. That's really important. Again, you don't want to lose the business to someone who has, their other coverages, and you want to. And it's a great way. It's an easy way to sell more policies. And then understanding your client's needs. A lot of times it's so easy to overlook this part, but that if retaining your client, it's a really important factor. You have to understand. You have to take the time to understand what their needs are. What are they going through as a company in this economic downturn, post-COVID environment? And educating them also about the hard market is helpful, because if you could take, this PowerPoint and information from this PowerPoint, which you will receive, that and it will be posted on our website as well. You can use some of these terms with your clients because they need to understand that you're not the enemy, and nor are the insurance companies for that matter. It's just it's been caused by the economic downturn and pushed into a hard market by the COVID. Okay, so I mentioned that we wanted to take a look at your agency book of insurance. What lines are you having the most success with? And I'm going to say you want to take a look at both new business and renewals, because obviously looking at your renewals is going to be helpful for you to be able to determine where you want to go. Because if you've got a fire going on in your renewal book, then you need to take a look at what you want to write going forward for new business. And evaluate what commercial classes of business you're having the most success with, and is your PIF, your policy in force, growing in those classes? It's important. PIF is very important. Knowing your policy in force count. Is it growing? So you're going to lose some renewals. You can't retain everything. So if you're not writing new business, you're going to shrink. Your PIF will shrink. So new business and renewals, good retention on renewals, and writing new business are going to allow for your PIF to grow. Also, you want to identify what commercial classes are hard market resilient. We'll talk a little bit more about that, but because I've got a couple lists of what we're seeing that people are writing that are being successful. Develop a marketing plan to build new business production in those commercial classes that you determine to be resilient. So commercial insurance production growth, you want to take a look at that company PIF growth and premium growth, and you want to set realistic goals for yourself. We're still at the beginning of the year. There's time for you to, take a look, establish what you want to do in 2024, given the facts that we will be in a hard market through 2024. What production percentage goals for each agency lines of business, right? So what do you want to write? What classes of business and agency lines of insurance? I personally feel the long-term commercial insurance is where it's at. Personal lines is very personal and very service intensive, and commercial insurance is more professional, more if you touch it well once a year, it's not as labor. Some, take contractors, they can be much more labor intense. But if you set them up right, you can if you set them up with the right coverages to begin with, you're usually able to service them efficiently as well. And again, production growth versus policy in force growth, you want both. You want premium growth, and you will see that premium PIF count grow as well. And then considering a balanced policy premium size for your commercial book, that's an interesting, because you want some balance, because you can't build a book on all $500, $750 premium policies. So the idea is to get a balanced book, get some $5,000 to $15,000 policies, and then you want, and that's a really nice sweet spot. You're staying under the the competition that's out there when they get in, when policy premiums get to a certain larger size that you're fighting off the big houses who want that business. So ideally that's the range, but look at what do you have a balanced policy premium size? Okay. So new business, commercial marketing, let's talk about it. You have to have a marketing strategy, and you have to put it to work. So it should be simple, not complicated, and don't, if you haven't set a strategy before, you want to start with the basics, and you don't set the goal so big that you can't reach it. Because with time you'll see what it needs to be as you go into this process. But you want to set weekly sales goals, and you obviously for new business premium, you're going to need an electronic filing system, because these are relationships that you develop over time, and you have to create risk profiles on each of these businesses that you're trying to write, especially if you want to get into larger premiums. You have to understand the risk and be able to keep that information electronically, and then an X date. This is where your X dating comes into. You're going to make contacts. You're going to data mine, what I call data mine, which is your X dating. You're gathering this information, and I would file it in a way that your X dates. You could do it on Excel spreadsheet. You probably could even do it in Outlook, or if you have an agency management system, you could easily do it in there. But you want to be able to start working on an X date. Their insurance comes up in June 1st of 2024. So you would want to start working that on April first, because you want to get 60 days. Well, I'm saying 60 days. In this case, we're saying 10 weeks. But you want to be working it in advance to make contact and set it up so you can make a nice presentation to them, and you have a chance to get to know them before that X date comes up. You want to follow that a sales equation, right? X date, make that presentation, and then follow up to close. And lastly, carriers have had the same labor issues. We've seen so much turnover at the carrier level, and carriers are stealing from each other, employees, good employees. So it's just really a messy situation. We're used to being really fast and efficient, and we are finding that we're having to be patient ourselves because carriers are just unable to deliver in the same amount of time that we used to get our quotes in. So allow enough time when you're submitting for quotes. Also, so stable commercial business, I talked a little bit about this. We're seeing restaurants, contractors, all types of consultants, which is going to be more E&O driven, Main Street America, a lot of garages have stayed very stable. Nonprofits have been thriving, and allied health, which is like home health care and assisted living facilities. There's a wide, big bucket that allied health covers, and then miscellaneous medical. We're seeing these to be very stable. And when it comes to regular coverages within the professional liability, we're seeing a big growth of demand for cyber liability. And we've got an online platform that you can just go on and quote, and it's super easy to use. Everyone's just raving about it. So I would suggest that you add cyber to every one of your quotes when you're doing coverage. When you're determining what needs to be, and that's on the cross sell as well for your renewals as well. Okay, recommended marketing strategies for agencies. So this is where it gets hard. Marketing is it's a relationship. It's a people business. You just have to get out and get to know people, and people will want to do business with you because they know you. So you have to get out and get involved in business councils, local associations. And if you become a member, you can hold information sessions at events and meetings that they have at these associations, trade associations. Finding ways to network with local business owners, actively participating in local events in your local town or city, and then sponsor local events in target industries that you want to write a lot of business in, that class of business. So let's talk a little bit about renewals. You probably heard me say this, but it's really important to treat renewals just like new business. Run that equation, X date, presentation, and close. You want to manage the renewals by that monthly expiration report, working generally 3 months at a time, because it's a constant motion forward. You're finishing up the tail end and moving forward. Calculate your retention and lapse ratios monthly. So you really do want to take a look at how you're doing. How much business did you lose? And lapse ratio is the first did you lose it in the first year, like you wrote new business and it doesn't renew at the end of 12 months? So the 13th month, you've lost the policy. So that's the hardest one. You do not want, you're probably not doing as well, and it's something to pay attention to, because you you rely on your renewals to stay profitable and stable as an agency. So you want to pay special attention to why you would be losing business after the first year. But retention overall, you want to measure it. Like, so how much did you lose versus how much premium did you have to renew in that month? And you divide it by how much premium you lost, and it's going to give you the ratio. Did you retain 90%? Did you retain 95%, 75%, 85%? Generally speaking, it depends. It could vary by class of business because some classes of business are more volatile renewal-wise than others. But and so you have to get that, and analyzing your book is going to be important to setting a goal for retention. And that could range from anywhere from 80%. I'd say ideally you would like to stay 85% to 95%. 95% is going to be a really healthy book of renewals that doesn't have a lot of implosion going on. Manage policy audits to prevent non-renewals. This is an area, if you've got an auditable policy, especially workers' comp, everything goes wrong when your client does not complete the audit in a timely manner as requested, and because you get a non-renewal as a result of it, and your client gets a bad taste in their mouth. So it's really important for you to manage if there's an audit going on to be involved, and then asking for referrals at the time of each renewal. That is also another really key and sometimes we just don't think about it, but training your person handling renewals to ask for a referral is really important. So let's talk about coverages. I mentioned that cyber liability. Cross-selling is really important. Also, for your E&O exposure as an agency, you really you need to be putting all the coverages that they possibly need on the table, and that becomes that becomes the challenge because there's a lot of litigation that comes through when you haven't offered the right coverage and they have a loss in that area. So, property, general liability, we usually get that right? Fidelity is one. Sometimes it should be looked at as a standalone policy, which we have markets for. Cyber liability, I mentioned, is really crucial these days because it's just an increasing exposure for ransomware, and it's not going away. It's getting worse. So you don't want them to have a loss that you at least didn't offer it, and you got to offer it in writing, not just verbally. Professional liability, if they have a professional exposure, they're providing professional services, you need to make sure that you're offering that E&O. Garage. Garage is a beast in its own. We represent many carriers that are specialists in garage, and that's all types of, from dealerships to auto repair, big truck repair, everything. Directors and officers liability, we don't pay as much attention to that one, but if you've got a board of directors that either they have that's made up of a family, or where there could be an exposure of board of directors disagreeing with each other or challenging each other, that would be an important coverage. Employment practices, well, we all know the exposure there. Markets are starting to open up a little bit in California, so it was pretty tight there for a while. But we do have markets for that, and that's obvious. That's an obvious important one coverage to have. Workers' comp is standard. Hired to non-owned auto, usually you can get that thrown in if you're packaging, but not always. So pay attention to it. Inland marine, they're driving equipment around. They're going to need that inland marine. And then umbrella, higher umbrella limits and excess. That's been a little bit challenging as well, but we are finding markets that are offering that coverage. So pay attention to all the coverages that they need. So that's most of what I was going to cover today. I just wanted to let you know a little bit about us. We are the broker's preferred wholesale solution. So fast and easy quote options. We do as fast as we can because we run a really tight ship with are very efficient. However, as I said before, our carriers are making it challenging because they're not able to deliver what we need for you. But we're good communicators. We are our underwriters are very knowledgeable, and they answer their phones, they answer their emails, and they'll walk you through if you have questions about a risk, whether it's going to fit or not fit, and then tell you what is going to be needed to get a quote. We also have, if you haven't been to our website, we've got great marketing material that you customize yourself. It's by class of business, and some of them are by line coverage as well. We have broker proposal templates, so you can make that professional presentation, make it easier, and so you could take those and make them your own. We have educational opportunities, webinars. We have recorded webinars, so you can go watch webinars and educational videos whenever you want. And then focus on renewal and retention and new business, and make sure you have PIF growth. Okay. Thank you all for joining us today. Let me know if you have any further questions. I'd be glad to help in any way I can. Thanks for joining us.